All right, we're going to get rolling.
They helped create an economy that was completely addicted to cheap money.
You need to buy savings bonds or something. You need to be way, way, way out of this space.
I subscribe to Miss Piggy's rule of money management. Always manage to have more money, you know what I mean?
It wasn't but 2 years ago that everybody was saying China's economy was going to be bigger than that of the United States. It's gone in the exact opposite direction.
So we're going to jump right in.
Welcome to This Week in Mining, where we talk about how to make money in the mining and metals market. My name is Jay Martin. My guest today is Ted Butler. Ted, it's great to see you, man. Thanks for coming back on the show.
Thanks for having me, Jay. Thanks for the opportunity. It's always good to be here.
I'm excited to jam with you today. There's a handful of things I want to talk about. Where I want to start, though, is with the, let's call it the rate cycle. And I don't want to call it a rate cutting cycle yet. I want to get your thoughts on it. There's a lot of people making a big assumption about what rates might do this year. Big picture, Ted, what are you paying attention to and what are you expecting for the rest of the 2024?
Yeah, so I guess big picture, 20 of the 37 central banks tracked by JP Morgan have initiated rate cuts already. Some notable names include the Bank of Canada, of course, the ECB, the Swiss National Bank, and of course the Fed is still yet to cut. The expectation seems to be September by the market. I think roughly 72.5% of market participants in the CME Fed Watch tool expect the Fed to cut in September. But based on the rhetoric of Powell in his most recent meeting and the FOMC members, it seems as though he wants to wait until December. I think this would be a mistake. I think it would be a big blunder. This obsession that Powell's got with inflation, it's almost like he's wanting an Icarus moment, which, if you don't know, is the Greek myth about the guy who flew too close to the sun. And that's what Powell's in danger of doing here, because he's quite frankly ignoring a lot of red flags. And for me, look at US jobless claims spiking to a 10-month high of 243,000. I think it was for the weekend in June 8th. Overdue credit card debt is the highest it's ever been in more than a decade. The latest reading from the Consumer Confidence Index dipped to 100.4 in June. And also, not to forget as well, the 900 billion of commercial real estate loans maturing in 2024. So, and apparently 282 US banks face the dual threat of that. And of course, the high interest rates tied to that. So I think the Fed will cut this year. I just think they'll be too late. And Mohamed El-Arian is a great economist who's legendary in the space. He literally said, he said that this data-dependent Fed is so backward-looking, so reactive in its function, that it risks being too late to cut. So you hear it from the best, and I would tend to agree with that.
Quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the two most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines, hit the link below to learn more. Now back to the episode. So the Icarus analogy is interesting, and you outlined a lot of the red flags that you're paying attention to: jobless claims on the rise, credit defaults on the rise, the commercial real estate exposure, I think, is on everybody's minds. And then you're looking at consumer activity. It's not looking good. However, Powell is hesitant to take his foot off the gas, right, in terms of cutting, I suppose, because he's concerned about inflation climbing right away. And he's probably right, though. I mean, what's your take on that? What's the inverse side of this, Ted? Say Powell ends up in a rate cutting cycle as early as September and continues that for a few quarters in a row. What are the red flags that would emerge on the other side?
Well, of course, if he cuts too early, then inflation is going to rear its ugly head. I think he needs to give himself some credit, and the Fed deserves some credit, I hate to say it, for how they brought inflation down from double figures, last year all the way down to 3%. I just think they need to realize that with the extent of government spending that they've done, 2% inflation is not going to be the new normal. I think they need to sort of accept the new reality, which is probably that inflation is going to be sticky around 3%, and act accordingly, which would be to cut rates in September, in my opinion. That's what I would say, Jay.
Do you think there's any risk, Ted? Sometimes when I see everybody look in one direction, I have to wonder, like, what's everybody missing, And, a guest I've had on the show here a few times, Jim Grant, he's, the god of rates, as they call him, and rate cycles. And he encouraged me to step back. He's like, look, everybody thinks very short term, but if you look at rates, this is a long-term trend, and they often move in multi-decade cycles. Now, there's not a lot of multi-decade cycles that he can use as examples, but what he points to is that from, say, the mid-1940s to the mid-1980s, rates typically just did one thing. They went up and to the right, and not in a straight line, right? There was volatility along the way, but that's what occurred. And by the mid-80s, you're paying 18% on your mortgage, right? And from the mid-80s to the mid-2020s, rates have just fallen, right? Again, volatile, not down in a straight line, but they've trended one direction towards zero. So his take is that, yeah, we may see some cuts, but we're not going to see deep cuts or prolonged cuts. We're now in a high rate environment for a prolonged period of time. When you hear something like that, Ted, how do you respond, or what do you think about?
Well, of course, he's a knowledgeable guy, so I, of course, hold that comment in high esteem. It could be right. We could be looking at higher interest rates for longer, but my worry is that we'd start entering this sort of recession, depression phase. The S&P, which is, maybe not having a wobble, but it's so reliant on the big tech like NVIDIA, who actually in recent days, I think, the CEO sold an enormous amount of shares. If we were to go into that high interest rate environment for longer, I think the S&P would suffer, equities would suffer, and that's the most important consequence for me. I think, of course, gold and silver, we'll get to that, of course, but they haven't been determined by the interest rate cycle, it would seem. Typically, this is the crazy thing, a low interest rate environment is conducive to high gold and silver prices, but what we've actually been in is a high interest rate environment, and yet gold and silver, or gold particularly, has been outperforming, and silver's starting to follow. So I don't believe we're going to be in a high interest rate environment for longer. I think rates will inevitably be cut, and the Fed will follow the rest of the world. And when that happens, we've got a brand new driver that's going to sort of accelerate the Western interest into gold and silver, which will consolidate with the existing Eastern interest, which has been the main headwind behind the huge gold and silver, not huge, the gold and silver price increases of late,
Yeah, I'm with you. Okay, let's stick with that for a little bit. What's your expectation? Yeah. Silver's hitting 11-year highs at present. Your expectation, gold and silver prices for the balance of the year?
I think we'll be at about $2,600 gold by the end of the year, and I wouldn't be surprised if we're about $35 silver. I wouldn't be surprised by that at all. For gold, like I say, it's been this colossal central bank buying from the East. Yes, China has taken a breather after 18 months of consecutive central bank purchases. However, I do believe that this will likely continue, especially as geopolitical situations remain fragmented. Look at Taiwan, you look at Trump coming in. Could that have an explosive effect, potentially? Perhaps Trump's aggressiveness will be enough to scare China away from an invasion of Taiwan, but that's certainly an interesting one. And then for silver as well, it's just a patience game. I know people, often get annoyed about these perma silver bulls, eternally calling for a silver bull market. But like I said in my chapter that I wrote for the In Gold We Trust report, these are generational opportunities, investment opportunities that, rely on the convergence of factors, and it takes time. It takes time for these factors to come together. We still have a prevailing supply deficit. We still have depleting secondary inventories on the exchanges. We still have a robust industrial demand driven by solar, and particularly from India, as we talked about last time. And we still have this relationship with gold. So you get the monetary demand, it's not dead. Silver, many people seem to think it's in this identity crisis where the monetary demand is no longer existent, but it absolutely is. And ultimately, a rate cut will just add further fuel to the fire of these existing trends. And rate cuts, the likely return of inflation, that'll reduce the real rate return of bonds and cash. And I feel that will usher investors into real assets, not just gold and silver, but commodities,
Now, okay, so because you're a contributor to both the In Gold We Trust report with Ronnie Stoferle and the Morgan report with David Morgan, do you have any thoughts on the trickle down to the equities? Are you watching silver and gold equities? Are you surprised, not surprised by the lack of activity? And do you have any predictions there for me, Ted?
Yeah, I mean, they've lagged more than I thought they would. The gold and silver equities, but I think in recent months we're starting to see, well, even in recent days, actually, this last week, I think the GDX jumped from $34 to $36. The silver miners, I think SIL, jumped from 30 to 33. So we're starting to see the response. And I think when Q2 numbers come out and the free cash flow that's stated by these companies, I think there'll be a lot more interest and recognition that, actually, these are really great investments and they're hugely undervalued. I think there's 10 baggers, deep value plays right now that are just being completely overlooked and completely unloved. But as Rick Rule says, that's what he loves about silver in particular, is I don't want to put words in his mouth, but he definitely says something about, loving the fact that not everybody hates silver. And that's reason to, be a contrarian, is that you have these asymmetric opportunities that emerge when you when you direct yourself to the value as opposed to chasing momentum, which is what a lot of my generation does with crypto, with AI stocks. And frankly, it doesn't give you much margin of safety, in my opinion.
Yeah, I like your call on the Q2 earnings as well. Maybe being a catalyst for institutional money to start paying greater attention and driving bigger capital flows into the equities. I'm waiting for that. And I think it could be an interesting moment. You mentioned other commodities as well. Core drivers there, Ted. I know you're paying attention to the AI energy demand, specifically how it may relate to probably copper and uranium, but outside of gold and silver commodity market, what's catching your attention?
Yeah, absolutely. Like you say, AI is a huge, again, underestimated trend, I think. Obviously, stocks like NVIDIA are doing really well. And that's quite odd because semiconductor stocks don't usually perform so enormously well. But like Google's new quantum computer, I saw on the Joe Rogan podcast the other day, 241 million times faster than the one released in 2019. And AI innovations such as this are incredibly energy intensive. And the market's already scrambling to scale up electricity production to meet this huge new AI demand. I think it was Justin Hoon, the Uranium Insider, I was listening to the other day. He was talking about Dominion Energy, the US-based utility, and how its plans in 2021 forecasted a single-digit growth in its electricity demand over the next 15 years. And I think they actually revised that this year, given the very recent realization of how much energy AI will consume. And now they're talking about 100% increases in electricity demand over the next 15 years. And of course, uranium, this is it, is going to be a huge instrumental component of this scaling up of electricity demand. I think the US Department of Energy Secretary, I think she's called Jennifer Granholm, recently had a press conference saying the US wants to triple its nuclear capacity by 2050. Bill Gates just invested $1 billion into a nuclear power plant. I think it's in Wyoming via his company called TerraPower. Sam Altman, again, these are big names, chairs the board of the advanced nuclear fission startup Oklo, and has been very highly vocal about the challenge in scaling up the electricity grid. I think he said something like, I don't see a way for us to get there without nuclear. France just secured low-cost funding from the EU to life extend, I think, 32 reactors that were obviously built in the 1970s, so that's going to consume more uranium. And the South Koreans as well. life extending another 10 reactors. And I think they're potentially building another 3. Don't quote me on that, but I think they are. So the idea that the uranium bull market is over is a myth. There's still more opportunity there. And I think, where the spot price is consolidating now is at this $80, $90 range. I think we will see this kind of staircase effect where it'll consolidate, go up again. And obviously the terms market provides the clarity as well. But I'll let you come in.
Okay. No, I appreciate that. So thus far, effectively we're betting on rate cuts, watching the silver and gold market and how it may respond. Predictions of $2,600 gold by the end of the year, $35 silver. I agree. I've been surprised by the lag in the equities, and I'm also watching Q2 earnings as maybe that watershed moment that will drive money to the developers, the producers, and eventually the explorers. And then on the energy front, just good call. I think that the idea that the uranium bull market is over is a myth, and you're leaning on essentially AI demand as being incredibly, I'd say misunderstood, or underestimated for sure. Okay, all good stuff, man. I want to pivot a little bit. I think we wrapped up the commodity sector, although I want to talk about politics next, and we might end up talking about commodities again as a consequence. But, everybody in the world is watching the U.S. election like they're watching the Super Bowl right now. It's like everyone's tuned in because honestly, it's just too entertaining to miss. There's been some consequential elections in your corner of the world as well, though. And so what are you paying attention to? UK, France, anything of consequence, Ted? What do you got?
Yeah, let's just make a note to come back to copper because I've got a bit I want to say about copper as well. But certainly with regard to politics, the UK, we just had our election. I'm based in the Isle of Man now, so I don't really give a about UK politics. But the left-wing government, the left-wing party got elected, Labour. Keir Starmer, he's called. He's a very, quite frankly, just a very boring, uncharismatic person. He's a socialist, really. But then again, in the UK, both parties, the Conservatives and the Labour, just generally sound the same nowadays. The Conservatives lost by a landslide. Rishi Sunak, walking away with his tail between his legs. And really, what we can really expect from the UK is just kind of more socialist policies. I mean, the most relevant one to commodities is the fact that Keir Starmer wants to create a new publicly owned energy company called the Great British Energy. And this would focus on renewable energy projects, building floating offshore wind farms, supposedly going to create tens of thousands of skilled jobs in the green energy sector. But the funding, of course, would come from the taxpayers' money, $8.3 billion that they're trying to raise for it. And actually, a lot of it will come from a windfall tax on oil and gas producers, which is supposed to be 75% as well. So this idea, which seems to be so common in the Western world, of just destroying capitalism and just wrapping their arms around any sort of value creation. I mean, you can speak about Canada, I'm sure, but it's just very saddening to see from the perspective of someone who's a libertarian, Yeah,
no, and based here in Canada, we see it. Canada is, resource rich per capita, probably beyond almost any country in the world. Whether or not we choose to leverage that wealth is an entirely different discussion. And we've had administrations that chose to, and we currently have one that does not, right? When we've chose to, it's worked out in our favor. I mean, Canada came through the 2008 financial crisis with a healthier balance sheet than any G7 nation because we leveraged our natural resource economy. We have the products that the entire world wants. It just comes down to will the federal government get out of the way and let the provinces conduct business and export what they want to export. And similar in France, Marine Le Pen was crushed somewhat surprisingly in terms of, I think, what people expected to happen. And this is almost a trend, I think, Ted. What do you think? Is there almost a false expectation that conservative parties and governments are going to make a comeback only to be disappointed on election day? And I ask this because obviously Canada and the US have very consequential elections coming up in the next 12 months. What do you think? Yeah,
no, it's a really good question. I think there's definitely a growing appetite for far right. I don't like to call it that because it's not. It's just right wing. It's just almost been. You get like funny looks if you class as right wing nowadays. But there's definitely this appetite that's growing in the UK. We saw this with Nigel Farage become an MP for the first time in however many years of trying. And I don't think it's going away. I think this will still be a prevalent theme. I just think it's going to take the voters to realise that the socialist policies don't work. It's going to take more examples for them to go, hang on a minute, we actually need a government that's willing to lower taxes, a government that's willing to create economic growth, not through government spending and through increasing the size of the state. I think this is going to take time, but I mean, you look at the effects of the socialist policies in Canada today. I think productivity is like lower, like since the 1980s. Unemployment's on the rise. I believe it was like 6% the last time I looked at it. And the UK economy as well. I mean, let's face it, the Tories that have been in haven't been libertarian. They've been very centrist. Real wages are the same as what they were in 2008 in the UK. The government's interest payments on its debt has gone from £40 billion in 2020 to £100 billion as of 2024. And that's from a conservative government that's supposed to be, keeping the wraps around the books. And they haven't been. And France, I don't know. I think France always seems to have this kind of left-wing tendency. And it looks like a hung parliament. So that's going to be really not a nice place to push laws through. It's going to be very inefficient. And politically, the world is a mess right now.
Yeah, well, it strikes me as that the Ben Franklin quote, when the people realize they can vote themselves money, that will herald the end of the republic. And that's where we're at because, it doesn't matter where you look. I don't think a conservative politician in Canada is going to correct that course. I think new precedent has been set, and this is the new game that will be played. Prior to Trudeau in Canada, we had a leader who actually balanced the budget. They ran a stimulus program, promised the public it would be temporary, and kept it temporary. They ran a deficit through the financial crisis, promised the public the deficit would be temporary, and kept it temporary. Now, the budget cuts required to balance that budget cost the Conservative Party the next election because nobody likes that, right? Everybody, they want to vote themselves money. I mean, at the end of the day, right? And that's the new cycle that we're in. And, I see these little glimpses of, call it conservative or just responsible politics. They get little glimpses of hope, but at the end of the day, if people can vote themselves money, that's probably what they're going to do. And, in Canada, for example, there's a big assumption that Trudeau will get crushed in the next election. And I sure hope that assumption's right, but I'm not nearly as confident as so many of my peers, just given the surprises that have occurred and the public sentiment where it stands and the new fiscal policy that is, again, precedent, which is just write the check and
so what do you make of Pierre, the opposition? Because when I see him speak, he seems quite competent and he speaks very eloquently. But is he a bit of a career politician? I mean, what are your thoughts on him?
Well, he's absolutely a career politician and nothing else. He's never had a job outside of politics. He's the definition of career politician. So here's my thoughts on Poilievre, Pierre Poilievre, who's the leader of the Conservative Party and will be challenging Trudeau in the next Canadian election for my American viewers. You've probably seen clips of him online. If you're watching this video, you've seen clips of Poilievre eating the apple while he's kind of running circles around the reporter.
Yes.
He's very charismatic. He's very witty. He's funny. He's packed full of one-liners. And all I would say about that is he knows how to play the game. That's what he's doing. He's a politician and he knows how to play the game very, very well because it's been his sole profession. He's good at it, really good at it. And that's what you see him doing. Now, I'm going to vote for him because we need change in Canada very badly. We need change. And I also know I've had the former Prime Minister Harper on my podcast a couple of times. He's very involved in the Conservative Party right now, which is a great sign. Some of that old school pragmatic policy will be there to support Poilievre. But, we're in this position, Ted, where, what's the conversation surrounding elections these days? It's never issues of substance like, like international trade relationships. A country like Canada, all we need in office is a deal maker. That's what we need. We have product. The world wants that product. We need to structure sound deals that are in our best interest. And probably the best way to do that for the federal government is just to get out of the way. Their job is to clear red tape and clear bureaucracy so that the provinces, which are the equivalent of states, again, for my American viewers, the provinces can conduct business how they want to. Alberta wants to sell their oil and gas. Let them. They don't want to, their problem. British Columbia, the same. Manitoba, the same. Saskatchewan, the same. But right now, what we have is a federal government that has crept so much into the provincial business. This is the same as the federal government creeping into the state business in the U.S. And as a result, now we have legislation like the Alberta Sovereignty Act or the Saskatchewan First Act, which are pieces of legislature the provinces are putting forward, essentially telling the federal government to back off and back down. And these are being vilified in the press as separatist movements. People are saying, oh, Alberta wants to separate from Canada. And it's not it at all. If you read the details, and I have, they're just asking for their constitutional rights as a province to conduct business in the way they were promised when they signed into Confederation. Anyway, it's a whole thing. I got have some thoughts on this. But, Poilievre, I think he's the better candidate. I'm concerned that we have another conservative candidate in Canada named Maxime Bernier, the leader of the People's Party. Great guy. I met him a couple months ago at a conference. However, he has there's a real possibility that he ends up splitting the conservative vote in Canada and effectively Ross Perotting the election like Ross Perot did for Bush when Bush ran against Clinton. And that's a real threat and a potential benefit to Justin Trudeau's Liberals. So it's not a sure thing, in my opinion. It's very uncertain. I think people need to start paying attention to it a lot more than they are and not make any assumptions. And despite my thoughts on career politicians in general, we need change in Canada, and that's the change we need. So there's a couple thoughts for you. Yeah,
absolutely. I mean, well, we're going to get to speaking of change. If you look to Argentina,
yes,
I just want to jump there right now. I mean, this beacon of capitalist libertarian hope in what is a sea of resource nationalism in Latin America. Obviously, Sheinbaum, the new Mexican president, just got elected. She's very eco-friendly, the climate scientist, seeming like she's going to follow on from AMLO's not anti-mining, but the open pit mining ban. It seems like I'm expecting more legislation like that, but it's maybe perhaps too early to say. But when you look to Argentina and you look at the policies that Milei's implementing and yes, he has obstructions in the legislative chambers, but he's actually starting to get momentum, I feel. And this is something that we're going to talk about in the future, on future episodes, definitely. We're going to have some great experts on to talk about this. But, he's this sort of chainsaw brandishing populist, and it's refreshing to actually see a leader that's not this sort of stuffy left-wing socialist. We've seen it all. It's so refreshing to see. And I think when I look around the world right now and I think about the places that I would consider living in, as a young guy, I'm 23 years old, like where does freedom have the best chance of being upheld? I mean, Argentina's up there, maybe top of the list. El Salvador, potentially. You look at Bukele, who's brought crime down tremendously, considering how high it was. But there's very few places where I would really go at the moment, especially I don't want to go in the UK. I want to get away from the UK and Canada.
Yeah. So that's a good segue to Argentina, because a lot of the press coverage of Milei out west is, let's say, mainstream press coverage, which you should not trust anyways. But obviously this guy's been vilified and demonized because he's a disruptor, and disruptors will always be vilified by the mainstream media. For somebody who's just read headlines about Milei and they're like, isn't this guy some ultra conservative, and he's got these prejudiced policies, and he's, what's your response? What's the truth about Milei that you're seeing? And I know you're going to cover this on your show coming up on the VRIC Media channel, which I'm really pumped about. But what's your take on Milei authentically?
Yeah, I'm very excited about that. So listen, he's come out of nowhere really, but he's not an idiot. He's a libertarian, he's an academic, he's got views that align with the Austrian School of Economics. Even his dogs are named after libertarian economists, Murray Rothbard, Milton Friedman, etc.
Right, that's right.
So this guy is as libertarian as it gets, and like I say, it's refreshing to see. Of course, one thing that's important is for mining, the provinces are still very important. The provinces are still the key here. And if Millet can't get his policies through, it doesn't matter how pro-business they are. If the provinces reject them, then that could be a real problem. But there's overarching policies that he's introducing, like the VRIC policy, which offers tax breaks and incentives for foreign investments over $200 million. He wants to dollarize. He's been very clear about that. So we could see a situation where we have the dollar and the peso operating as a monetary standard in tandem together for a while until the US dollar takes over. Of course, that would have a devaluing effect on the peso. But potentially there are benefits there in terms of, trading in the US dollar for Argentinian businesses. And there are a lot of AI companies, I think it was Tesla or Google, someone's starting a new office in Argentina, and they're very excited about it. So inflation is starting to come down. Obviously, it's enormously high, triple digits, but it's starting to come down as a result of Millet's draining the swamp, as Trump would call it. So lots of reason to be excited about Argentina, and a lot of reason to be, looking at Argentinian mining companies, in my view, of whom I'm already invested in.
Yeah, he actually is draining the swamp, as opposed to just saying he's going to do it and making some hard cuts to government headcounts. And do you want to talk about any of your investments in Argentina? Anything that you want to share?
I'll save the naming names for another time, I think. All right. Obviously, Argentina, less on the lithium. I do have some exposure, but that was from a while ago. It's the copper story, and that's actually a perfect segue into what I wanted to finish with, which is copper.
Let's do it.
The case for copper right now is actually probably behind gold and silver, my most the investment commodity that I'm most excited about. Mm-hmm. I do side with Lobo Tigre in the sense that I think copper will perform better once we've got past this recession cloud, which I believe we will potentially go into. If the Fed fails to cut in time. But the case for copper, the scale of demand is unbelievable. Let me just read you some figures here. So data centers, everybody knows we're going to need loads of them, and they're already being constructed. North American data center infrastructure is expected to grow from $33 billion, which is what it was in 2020, to $70 billion in 2030 and $185 billion in 2040. So the copper consumption for these data centers is going to go from 197,000 tons in 2020 to 293,000 tons in 2040. And for some context, Microsoft's like $500 million data center in Chicago required about 2,177 tons of copper. And that's a huge amount. That's a huge amount just for one data center. And that's not even considering the infrastructure requirements. An EV, as people know, needs three to five more times copper than internal combustion vehicles, as is the case with the Honda Accord, which uses 200 pounds of copper, 5 times more than the internal combustion engine model. And then, there's public transport as well. People can completely forget about this. Like trains use around 2 to 5 tons of copper for every kilometre of railway track. And, you look at like something like the Belt and Road Initiative in China, which has been consuming so much commodities, people going under people's radar. Just one example, they planned this 1,000 kilometre Sichuan-Tibet railway track, which forms obviously part of the Belt and Road Initiative. That'll use about 2,000 to 5,000 tons of copper. And that's about 20 to 50% of the 10,000 tons of physical copper that's held in the Sprott the Sprott Physical Copper Trust. And that's just for the track of one railway, And then if you talk about the other railways that just China have got, they've got the China-Pakistan Economic Corridor, which is another railway that costs about $58 billion. That's going to consume a similar amount of copper. For high-speed rail, even more copper, 10 tons of copper per kilometre of track, allegedly. Even if you say it's less, you're still talking about, 60,000 tons of copper to get China's high-speed rail network from 42,000 to 50,000 by 2025, which is what Xi Jinping is trying to do. So I'm very bullish on copper, as you can tell by my excitement. So,
and confident enough to make a price claim there, Ted.
I don't want to give a timeline, but
Yeah.
it's not going to be long before $5 copper again. I mean, we already had it, per pound. But like I say, I just want to be wary of this recessionary cloud. I'm taking the time now to sort of pick the stocks that I like. And then once I know that recessionary cloud is gone, I'm going to buy and then hold for the long term, because that's the idea. I don't do all these sort of like day trading stuff. I think patience is an underrated virtue today in terms of investing.
And often the best trade is patience. All right, look.
That's very true.
I love it, Ted. Lots of actionables and some hard predictions on the price of a couple commodities. I love it. I'm excited to have you join the VRIC media team. So Ted's going to be hosting his own show here on the channel every Friday. He'll be bringing you fresh takes with so many of the brilliant money managers, investors, entrepreneurs in his network. He'll be bringing them to the platform here, picking their brain, as myself and Jesse do every week on this channel. Super fun. We're here to make money in the metals and mining sector, and Ted's going to help us along and help you guys along. So, Ted, I'm pumped to join the team, man. I'm excited to check out your show. You launch next week. It's exciting, and I can't wait to catch the first episode. So, thanks again, brother. It's always good catching up with you.
Likewise, Jay. Thanks again for the opportunity, and always good to speak to you as usual.
All right.